I'm joined by Jane Foley, Senior Forex Strategist at Rabobank, and Elsa Lignos. She is Currency Strategist at RBC Capital Markets. Jane, Elsa, welcome to both of you today. It's a very busy day on the currencies market. If we could start off, Jane, just looking at what's happening with the euro against the dollar. What are your thoughts on where that's going?
Well, I mean, it's been going up really very rapidly in the last few weeks, and I think it's got further to run. And part of the reason for the huge move in terms of this massive pace, you know, can be explained by, if we look at futures positions, for instance. Last week we had the IMM futures positioning, and we showed this massive swing in the euro positions. Everyone, it seemed, was very short for the euro. All year we've been hearing stories about, you know, the weakness in the periphery, all of these stories, and all of a sudden the markets turned around. And of course the Fed is a massive player in this part. The 21st of September, the Fed indicated it would do more QE. QE basically means more cheap dollars, and the euro here is a path of least resistance because the ECB are not going to intervene at these levels, and therefore, particularly bearing in mind the ECB could be hiking rates now well before the Fed, it seems that the euro is taking an awful lot of the strain of what is basically a very soft dollar story.
And so where would you expect to see it?
Well, you know,
that's a difficult one, isn't it?
It's a difficult question. Our 12-month forecast is 140, but that, you know, it's the pace of the gains rather than the direction is what's taken us by surprise.
Right.
So, you know, 140 now, it seems to be within touching distance, whereas, you know, at the beginning of September, people thought that was quite a weird forecast. It was certainly against the consensus view. So certainly there does seem right now to be the potential for further gains. But, you know, this might still be a rocky ride. There is still potential for problems in Ireland. There's still a potential for problems in Portugal, etc. So perhaps some more volatility, but certainly with interest rate differentials playing in the ECB's favour, I think the euro could remain supported. Elsa,
are you as bullish on the euro?
Not at all. And in fact, we're not as bearish on the dollar either. So we've put out our forecast today, our October forecast, and we're calling for euro-dollar slightly weaker into year-end and significantly weaker in 2011.
So where do you see it in 2011?
Well, 12 months from here we see it around 122, which would actually be just a move closer to what is perceived as fair value.
But what about the arguments over QE allowing an awful lot of dollars into the market?
That's a commonly stated argument, and a lot of people talk about this debasement theory for QE. But we've been looking at the effect of QE on the dollar, on the yen in the past, and on sterling, and we can't find any lasting impact of QE on the currency. Now, it is true there is a very significant announcement effect. QE certainly has an impact on short-term rates, on rate expectations, and also it has an impact in terms of the expectations for the economy going forward. But it pretty much just gives us an assessment of what the Fed is thinking about the data given what we've seen so far. And now that's in the price, we don't see much scope for further dollar weakness from here.
And in terms of the euro, are you concerned about the issues that we have in Ireland and Greece and Portugal?
I don't think Ireland, Greece and Portugal are the ones to worry about. The one we're worried about is Spain, and that's really a 2011 story. Now, there hasn't been much in the way of a trigger for Spanish problems in this quarter or the one coming up. But further out the line, we do see problems for Spain, given the economic data that has turned to the worst, and given the fact that we think the government's forecasts for next year are far too optimistic with respect to growth, and they will need to do more to hit their targets.
And Jane, looking at sterling, where is that likely to be going? Because obviously we've got the Bank of England meeting today. Is there any chance that we're going to see some form of QE? Is there a reason for the Bank of England to start buying up bonds?
There are reasons, but I don't think you're going to see it. And the reasons, I think, have been, you know, well publicised by various members of the MPC. And that is, if you look at money supply in the UK, it's still very weak. If you look at the pace of the economy going forward, yes, we've got growth, but it appears to be slowing down. So you can see the arguments. But at the end of the day, inflation is at 3.1%. It's refusing to go down. We've got a VAT hike in January. The likelihood is, therefore, that inflation will be pushed higher again into the beginning of next year. So, as a consequence, if we are to retain the Bank of England's prediction of inflation falling below the 2% target, that can't really possibly come until the end of the Bank of England's forecast horizon. Therefore, it's very difficult to imagine that the Bank of England could do more QE at one hand and then write letters to the government on the other hand explaining why inflation is so high. They have an inflation target. What I would be interested to hear is if a discussion develops about what else they could do. Now, I'm a little bit confused on this point, but we have had 2 MPC members in the last month or so talking about potentially pulling out certain sectors of the economy and trying to stimulate those. How they would do it, I'm really not quite sure, but certainly a discussion on that, I think, may develop further, and that would be interesting.